Hello and welcome to Trading 5 Talents. In today's video, I'm going to do something a little bit differently, and that is I want to show you a trade that I made this past week on the ticker symbol SST, and how I entered, or why I entered, and why and how I exited, and the final profit for this particular trade. Now, I got the idea to trade SST from the website optionsellerroi.com. I've done several review videos on this website, and basically it's a website that offers a free screener for cash secured put ideas as well as covered call ideas. And last week, in the middle of the week, I had some cash that I wanted to make a trade with. I went over here to the covered calls section of the website and I put in all my criteria, and I think it was like, this is going to be different because it's not last week, obviously. So I think I did like 4 or 5 days max DTE and then ROI of at least 2%. And so I ran the screen, and what came up, so right now nothing's coming up because there's nothing expiring in 4 days. Let's just say 10. So what came up, and surprisingly, this one came up, SST. And so SST, it was only 3 days until expiration. It gave me a strike price and then, of course, the premium. So I thought, okay, I'm going to try this out. I hadn't heard of this ticker or stock before, but I wanted to try it out and see what happened. Okay, so here's the chart for SST for the past week. It goes from April 4th, right about here, all the way until the end of the week. And so SST, if I show you my screen here, all right, so here's SST on my Robinhood account. The company name is System 1. Let me go all the way down here and look at all my transactions. So I had this buy order. So April 6th, I got filled, let's say 1 p.m. Eastern time at 1919. So that is right here, April 6th, 1 p.m. Eastern, so 1300 hours at 1919. So this is when I actually got filled, and I purchased 100 shares. As you can see here, my limit price was $19.25, but I got filled at a better price of $19.19. Okay, so after opening this position, I sold a covered call on $19, or at least I set the order in to sell at $19 strike price, but I immediately canceled it because I found out that the FOMC notes were going to be released at 2 p.m. this day. So I wanted to wait until after that to see how the market reacted. So you can see that this stock went down and then it shot back up. So after it shot back up, that's when I wanted to sell my covered call, but I was going to do it at the $22 strike price. And you can see that was filled at about 3 p.m. on the 6th. So $22, let's see, right about here. Let me put a line right there. Okay, so $22 is this white line right here. So right around here at 3 p.m. is when I sold that covered call for 22, or at the $22 strike price, and I sold it for $127 profit, or $1.27 per share. And then I just waited. And so I waited and waited, and in 3 days I was going to keep my premium, and then maybe if the stock went up, then wonderful, I would gain that in capital gains as well. But you can see the stock went down. Right, come April 7th now, starting right here, you can see this gap up right here. I mean, this huge run up with this wick on the morning of April 7th. So what I did was I wanted to get out of this covered call because it was so high. The stock price was so high. So I put a buy to close order, but it wasn't getting filled, so I canceled it, and then I did another buy to close order, and this was filled at 11 a.m. Let's see, 11 a.m. would have been right here. So this red candle, 11 a.m. would have been this red candle right here. This is when I closed it, and you can see that I closed it for $3. So I bought it for $1.27. I'm sorry, I sold it for $1.27, but I had to buy it back at a loss for $3. So I'm up $1.27. Now I'm down $3. So overall, I'm down on this position. Then the stock started running, and you can see how much it went up. And what I did then was I wanted to capitalize on this, but I needed to have my stock price run higher than, I believe it was $25, and that would have been right here. Okay, let me put a line here. Okay, so I needed my stock to run up to at least $25 in order for me to gain as much profit as selling my original covered call here at the $22 strike price. So after market close on April the 7th would have been right about here. No, right about here, between this red candle and then this gap up. Somewhere in here, I was able to get out at 26.26. So it looks like right about here. So let me add in a, let's draw a horizontal line here. And then we need to make this 26.26. Okay, so I was able to exit right here, and I only exited 75 shares just in case it went even higher. And if it didn't, then at least I had calculated that I needed to sell my last 25 shares of my 100 shares, the last 25 at around $21 down here to average this $25 per share that I needed to at least gain my covered call profit. Okay, so I'm sorry if it's a little bit confusing, but at least in my mind, it made sense while I was doing it. So the next day, April the 8th, I noticed this gap up right here. And so what I did is I set, you can see, a trailing stop order. And so basically what this does is it sets a limit price that is, in my case, 3% of what the current market price is. So it just keeps on raising the limit price for me to sell. And so I set it at 3% of the current market price. So you can see that the stop price was triggered at $32.99, and I was actually filled at $32.74. So let's put that up here, 32, where is it at, $32.74. Draw a horizontal line here, and then, so I bought down here at this yellow line at 19.19, sold a covered call, but it kept on rising, so I exited that for a loss. And now in order to recoup everything plus that premium, I needed to sell at least at $25. But half of my, 75% of my shares I sold at $26.26. I let the other 25 shares ride, and it got stopped way up here at the $32.74 mark. So all in all, this is my total profit from SST in these 3 days. Okay, so you could see, I'll just use this screen right now. So negative $1,918.66 to buy my shares, 100 shares, $127 credit for selling that first covered call, negative $300 for a buy to close order. So I lost on that covered call. And then I sold 75 shares, and that credited me at $1,969.50. And then I sold the rest of my 25 shares with a trailing stop order, and that was $818.50. So all in all, my total was right here, $696.34. So this was based off of an original investment of $1,918.66. So if I took the $696.34 that I made divided by what I used to purchase my initial 100 shares, multiplied by 100, this was a 36.3% ROI in 3 days. So that is really wonderful, and I'm so glad I found this trade using optionsellerroi.com. So there's a link down in the description if you want to take a look at that website and get your next wheel trade idea. So originally this was what would be called a buy-write strategy. I would buy 100 shares, simply write a covered call, but I bought the 100 shares. I wanted to wait until the FOMC. I ended up selling a covered call, changed my mind, took the loss, but I gained so much more on the stock appreciation that it erased all the losses on the covered call, and it turned out to be a really great trade. This is not what I would normally do, but I just wanted to go ahead and show you. I just thought it was kind of fun. Maybe someone else would think it would be interesting. But otherwise, if you have any questions, leave them down below. Catch me on Twitter at Trading5Talents. And then go ahead and if you'd like, subscribe to my channel where I do some reviews on a couple of sites, including the one that I found this trade on, as well as my monthly progress using the wheel strategy to help pay off some of my bills. So until next time, trade wisely. Take care.